Welcome everyone to the show. This is Matthias and this is the CoinRock show. Welcome to today's episode. Today we have Kartik and today we're going to be talking specifically about everything Ethereum, everything AI. And as always, we will go with the flow and see where the conversation takes us. So, Kartik, with this, the way we do these shows is I usually read a very simple bio that we have, but then I want you to tell us more about everything. This is just to set the stage, and then tell us more in your own words. So, this is the bio, the quote official bio we have. Kartik is the CEO and lead contributor to at Demether, the AI-powered yield optimization platform simplifying DeFi for everyone. He brings over 20 years of experience across investment banking and buy-side roles at Goldman Sachs, JPMorgan, Merrill Lynch, BNP Paribas, and Animoca Brands, where he served as portfolio director and head of blockchain. Kartik combines deep expertise in DeFi strategy, user experience, and ecosystem building, now leading Demether's mission to make advanced DeFi as easy as drag, drop, and deploy. That's the official bio. The floor is yours.
Great, Matthias. Thank you so much. It's an absolute pleasure to be here, and I really appreciate the airtime. So, yes, indeed, my name is Kartik, following a relatively boring and pedestrian 18 years in TradFi. I happened to come across a couple of fascinating individuals, and they were Robbie Young and Rick Yatsu. So originally Robbie had kind of wandered into my office. Honestly, I wasn't even actually meant to be in the meeting, but I got tapped on the shoulder by the head of corporate finance. What turned into be what was meant to be a 15-minute intro turned into 2.5 hours, and I deeply fell down the rabbit hole. The idea of applying blockchain systems and Web3 into gaming was just captivating to me. So I actually spent 3 years pursuing himself and Yat to try and list Animoca Brands in London. I failed miserably over two firms, so I gave up, got serious FOMO, and begged for a job instead, and became one of the first hires on the corp dev team, and thus began quite a deep adventure in Web3. So I guess fast forwarding a couple of years on, I again got itchy feet. There were some incredible things happening in DeFi, and I had an idea in my mind and was pregnant with anticipation to try and take it out into the world and see where it got us. So Demether was born. We managed to raise a little bit of kind of money for friends from friends and family, and a whole bunch of Animoca alumni and executive management team to establish what we have now. So that mission slightly changed along the way. Originally, we were planning to create a suite of yield-bearing tokens, starting with LRTs, ending up with a very sophisticated idea we had for a stablecoin.
Mhm.
But just about 4 months ago, we discovered AI. And from my perspective, it was like emerging from a dark cave where you've only ever seen the campfire to seeing the sun for the first time. There is no way you would ever go back in, and there is no going back, like once you've seen the sun. So we took AI and put it at the absolute core of everything we're doing. We want to use that as the ultimate tool to automate. And with that automation means we can lower the barriers of entry into DeFi, reduce a tremendous amount of friction. And so Dem AI is the product we're building. Demether 2.0 is basically the vision of bringing AI and DeFi together in order to bring DeFi to the masses.
Got it. Okay. When was so diving back into your TradFi experience, when did you make the jump from TradFi to Web3, let's call it?
Yeah, this must have been late 2021. So we'd
Got
just
it.
kind of gotten over the, COVID pandemic, and with the great resignation kind of resonating in everyone's subconscious mind, and having a lot of time to think by myself at home.
Yep.
Because back then, actually, my wife and kids were off in Australia and we were like completely separated. So I had the house to myself,
Wow.
did a
Yep.
lot of DIY, did a lot of meditation and thinking. And it was clear in my mind that I wanted to achieve something bigger. And there were a number of opportunities over the course of my career where I really regretted not having taken a leap. So this was my time, and I think when Animoca Brands came along and they raised a lot of money and
Yep.
provided quite a lot of visibility on the vision, it was a no-brainer for me to try and join.
How do you see, so you've been really behind the scenes for, let's say, 5 years now. How do you see the space, the evolution of the last few years? How different is it today from from like the first impression, right? At, 2021?
Yeah. So there were two things that I was desperate to kind of find out as soon as I got into crypto. Number one was like, please tell me what the whales are thinking. Like, once we know what the whales are thinking, and you have
Yep.
to be an insider in crypto, then my God, we can predict the cycle, and I'm just going to walk out of this cycle a millionaire. And of course, I asked Robbie on the first day of work, and he was like, Kartik, I have no idea. Like, there's a whole bunch of people that we know that are anonymous. A number of people have invested in our stock. A number of people we've invested alongside in tokens. But really, it's not like some kind of secret cartel that's managing things from the background and driving these markets up and down. And that's a point at which I realized it was such an incredibly nascent industry where just a
Yep.
group of individuals were acting completely independently as whales. And that had such a profound impact on the market to kind of drive that volatility you saw through the cycle. So fast forwarding now, in terms of what we see from the investment side, from the portfolio side, and from the market action side, volatility's come down. And
Yep.
it's obvious. Like once we've hit like multi-trillion dollars of valuation, it takes a lot more money to actually move the market. And I think that's a very natural progression. Number two, the whales that have historically benefited from and possibly driven the volatility are now actually coming out. You had
Yep.
$9 billion of capital from the Satoshi era of BTC placed by Galaxy with virtually no impact on the market. That's
Yep.
mind-blowing. I mean, if you imagine last cycle, $9 billion dump on the market once you've doubled the old all-time high, probably would have ended the cycle.
Yep.
So we've really come a long way in terms of institutional appetite and a smoothing process that comes with that transition. And the final thing is professionalization. So there were a lot of cowboys out there when I first started plugging into deal flow and being on the buy side at Animoca Brands. I mean, there was some astonishing lack of kind of diligence, oversight, legal frameworks, and
Yep.
protections for any kind of sensible investor coming out of TradFi. And to be honest, it was tremendously confusing. And over the past few years, we've just kind of sense checked everything, gone back to basics, and really started to understand that we had to have a smoothing, calming influence, a positive effect on the way a lot of these deals were structured. And Animoca Brands then, as one of the largest portfolios out there, and probably still in the top three
Yep.
among the volume of companies that invested in, um, could have that effect, and we did. So I have, been privileged to witness the professionalization of this space, and some level of standardization came out of it as well.
Yep. It's interesting because so thinking back of, 2020, 21, specifically about the whales, I think there's this idea, this legend that the whales are this cartel, exactly what, the way you described it. And actually, when you get to know the whales, I mean, I'd say at least half the time they're just ordinary people who literally bought a coin randomly and they bought supply. They bought 0.5%, 1%. Sometimes they literally were drunk and they bought 2% of the supply. And the coin goes up and they end up being whales and their bags are worth millions of dollars. And it's one of those like, I don't know what to do now. There's a lot of those too.
I completely understand the sentiment, and it's happened to me on a couple of occasions. So one, I lucked out with Polygon. Number two, I'd lucked out with Nexo. So Nexo, I was
Yep.
generally like a fintech aficionado even before I came into crypto and Web3. And of course, its kind of backbone is finance in it all. But I bought the tokens at something like 11 cents or something. It cost me $250 to get into the middle tier of the
Yep.
CRO card. And suddenly I was sitting on double-digit thousands like, towards the peak of
Yeah.
the cycle. And you really don't have a calibration of what to do,
Yep.
can come from TradFi and sensible, maybe 100% double your money type of events that come along once in every 10 years to
Yep.
happen multiple times in a portfolio. It's super disorienting. So I can appreciate that you wouldn't have a reference point, let alone the ability to found a cartel
Yep.
and start to manipulate anything. But that's one of the magical things I've really found out about Web3. And one of the things that really attracted me, I mean, coming from such a constrained environment in TradFi, where information leakage was so important to
Yep.
clamp down on and reduce inside trading, all that kind of stuff. You had a huge gap between what myself as a sell side analyst at an investment bank would know versus a hedge fund manager versus an average Joe on the street. And it's just like mind blowing. Like it's a magnitude of difference in terms of
Yep.
information transparency. So you bring everything on blockchain and everything is democratized. So anyone out there with the smarts and or access to a block explorer and their wits about them can do a lot of sleuthing and start to understand flows. So I really appreciated that level of transparency and the changes it brought about. It put everyone on a genuinely kind of level playing field.
Yep. I distinctly remember someone who had $12 million worth of a coin called Safe Moon. I don't know if you remember Safe Moon at the time.
I've
Thin
heard of it. Yeah, I
liquidity at
don't
the
think I'd done
time.
before.
I was in a group chat, $12 million worth. The screenshot was real. He bought early, one of those. It was probably one of the first coins that was it was like a typical kind of like yield kind of Ponzi coin that shot up and came back down. $12 million, could not sell it. He literally was shocked. And then of course came back down. Liquidity was very difficult it was thin, right? So there's no way he could exit with 12 million. But the point is, yes, you sometimes it really is right time, right place. You buy something and it goes up. But I do agree, of course. I mean, with everything you said about volatility is different this cycle, very different to what we saw 4 years ago. A lot more coins. I mean, thousands, hundreds of thousands of coins launched every month at peak.
Mm.
So of course, much more. You know, the meme coin craze, of course, took a lot of capital away. What's your view based on, and I definitely want to get into the tool itself. By the way, we were not paid by the tool by Demether to feature anything. We just wanted to have Kartik on to just have a conversation about the market and of course we'll talk about what they're building. Um, Curious to hear your thoughts about very much the institutional appetite this cycle that we're seeing versus the previous cycle. I'm curious also because you are from TradFi. Last cycle was difficult to get TradFi people. I have very close friends who are in the London hedge fund space and who run funds, and it was very difficult even to have a conversation with them 5 years ago, and now the conversations are very different. So, what's your view on really that move from no like institutions, like being frowned upon by the institutions to now being led by BlackRock? How's that evolution from your view?
It has been absolutely game changing. And I think the real catalyst has been political will.
Yeah,
So political will coupled with regulation that it has gone through. I think regulation was always coming, but the idea that it's now benign, fully clear, not creating any kind of specific gray space in which people can either exploit it or for the SEC or other regulatory bodies to selectively, police the system in a way that no one really understands. So all of that is 100% welcome.
yeah,
And in reality, that's actually what the institutions were waiting for, because they don't necessarily think in terms of profit and opportunity. They also think in terms of opportunity cost. So,
yeah,
what will this cost me in terms of compliance overhead? Could it result in litigation? Could I put the money elsewhere actually in order to have a much more thriving business unit that I need to ultimately account to my shareholders for? So, all of these things coming together have created such a positive momentum and kickstarted that flywheel. Now, the two things that I really didn't expect was the extent to which all of this regulation and political U-turn would be fast-tracked. I mean,
mm,
yes, I think a lot of us, especially from the TradFi through to the macro markets and those who are operating in higher finance, saw the incoming, impact of Trump presidency.
yeah,
But the agenda unfolding from the House to Senate, that was amazing. So the fact that a lot of the wish list of the crypto industry got ticked
yeah,
off within the space of just a few months is something that I think caught a lot of people by surprise. The second thing is the emergence of these treasury vehicles.
mm,
So that in itself is super interesting because to access the retail crowd, I think crypto as a whole as an industry fully recognized that there were tremendous points of friction. And to reduce all of these, you really had to have a method by which you can demonstrate the value. And so Michael Saylor educating people on Bitcoin and really simplifying that narrative into one or two bullet points made it a lot easier to digest
yeah,
and for that to permeate into boardrooms. And then the second thing is to put it into an equity vehicle. So that is an amazing trajectory because you could just go to your brokerage account, you can call up your high net worth kind of stockbroker and make it happen.
yeah,
He doesn't need to kind of, or she doesn't need to scratch their head and work out how to create a Bitcoin wallet for you and then keep it safe. It's very simple and very much in line with their fiduciary duty to learn about and then educate others on. So those were two factors that I think were absolutely essential
Mm,
and really start to catalyze the framework. And once share prices start moving, multiple hundreds of millions of billions start moving, it's imminent that retail would start to filter into it.
yep.
So all of the trepidation that they'd had during the Democrats' administration and a lot of umming and ahhing in certain other geographies before regulation was conclusively passed is now over,
Mm,
and it's time for retail to get on board. So I'm extremely excited. I see the current cycle as very well underpinned. And now I wouldn't say the sky's the limit. That sounds like very gimmicky and salesy as to where I think it's going. But now it feels like that potential is uncapped.
yep. I definitely want to talk more about over the last few months, it really has been an institutional-led cycle so far. I mean, retail is we saw waves a few months here and there over the last 18, 24 months, but it's really been about, the big, I mean, Larry Fink going on TV, a lot of other big execs going on TV and pretty much selling crypto to the world. But we haven't
Hmm.
seen the wave of crypto retail that we saw in 2020 to 2022-ish. What's your view on that based on where we are now? This is August 2025. Definitely more institutional led so far, even this summer. Where does retail fit into this? Do they come later? Does it stay more institutional now? What's your view?
Yeah, that's a really fascinating question, and I have to kind of unpack that in my mind. But I think two things happened. So you had a very clear bifurcation between the performance of BTC, the underpinnings of BTC, and the
Yep.
marketing of BTC. And if we decompose those points into those three areas and then apply it to the rest of altcoins, which is the biggest altcoin is ETH. And
Yep.
it had two massive overhangs. Number one was the potential litigation. And so there was a kind of rally the wagons and protecting your own without making too much of a splash and getting on the SEC's radar, which is now completely reversed. The second thing was an point of introspection, right? So the prolonged question of are L2s really bleeding value from the underlying? Did we really miss a trick by not trying to stitch the value proposition together before
Yep.
we started to present it? And these two roadmaps were divergent, right? So L2s that are looking after themselves and Ethereum trying to struggle along, which I think is conclusively resolved with the changes at the foundation
Yep.
and a much more kind of proactive marketing approach. And the third thing is the way that this ripples into everything else, because the traditional investor, regardless of whether you're institutional or whether you are retail, quote unquote, you're used to things happening in waves. So first BTC pops, then ETH pops, then everything else
Yep.
pops. But suddenly you had Ethereum lagging, you had Solana ripping, and you had this subclass
Very
of
confusing cycle for those who've
oh
been
my God.
in. Yeah.
Oh, absolutely. 100% agree. Like, and then you had this kind of subgenre of meme coins, etc., exploding and tremendous amount of momentum around the idea of a super cycle. I
Yep.
mean, I have absolutely nothing against memes, but whenever I hear anyone talking of any kind of super cycle outside of TradFi
Yep.
without some kind of overlay of, yes, it's happened in the past, it is literally impossible. So
Yep.
that's a point at which I kind of lost a lot of faith and thought, okay, it's just institutional and it's just a BTC cycle at this point.
Mm.
That has so far dramatically reversed, partly because the proliferation of treasury vehicles and people really
Yep.
having a vested interest in pumping their individual tokens, but also because of the deep-rooted changes that have happened within the Ethereum ecosystem. So I think we're kind of back on track. It's happened at a lag, partly because of the internal stuff that needed to play out, and also because regulation had to be passed for people to really breathe that sigh of relief and start to feel confident again in terms of promoting and growing their own ecosystems. So yeah, that disjointness
Mm.
is now synchronized, and I think we should be back on track for a classic cycle.
Interesting. When you say classic, that means retail coming back in, being actually interested, curious about new coins, new projects, new narratives.
Yes,
Yep.
exactly. So the narrative cycle will kickstart again. There will be pumps and losses and rotations between subsectors. I think it frankly helps that there was a lot of restructuring within the VC industry in crypto as well.
Yep.
So the vast majority of leading funds that had led a huge number of deals and put out hundreds of millions have converted into partial liquid funds. So the
Yep.
ability to arbitrage those opportunities to pick up more and kind of relieve yourself of positions is a lot more dynamic. Plus having the depth of, institutional bid on the side and the
Yep.
equity market pool means that there should be a smoothing and yeah, we should get right back on track with giving access to retail.
Interesting. What time frame are you expecting, or what's your view on pure retail?
Yeah, so I'd say we probably had a dark 6 months to maybe even
Yeah.
9 months. So rebasing that forward, if I'd originally thought that the cycle could be wrapped up before the end of the year, I think we're going to go deep into 2026. Like retail
Interesting.
has just
Yeah.
joined the crowd
Yep.
now.
Yep.
Now is the point at which you can kind of start the traditional kind of timer.
Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. Very interesting. There's a lot of different forecasts, right? Some people say, Q4 is the end, it ends in euphoria. I personally think we haven't really seen this being such an abnormal cycle, institutional led. Here and there are a few pops with ETH, hitting what, 4,500, 4,200 a year and 2, 3 months ago, and then
Mm.
dropping back down. Last summer was dry. January to June was dead this summer. No retail memes coming back. It has been a very confusing cycle, even for those who've been in this for several. Um, and so, of course, people predicting Q4 this year, so three to 6 months left, and you saying that okay, this is actually the start because we've rebalanced the almost the architecture of the entire industry by having BTC and ETH. Interesting.
I think that's absolutely fair. And to kind of add to that as to why I think it should proliferate, it's because there's a lot of dry powder on the sidelines from people having made a lot of money in the Solana ecosystem.
Yeah.
And also now in Ethereum that we've kind of just about gotten our head above water.
Yeah.
So they can start to have the confidence and using these two kind of pole positions to be able to invest elsewhere at the fringe. And yeah, given that there's low levels of liquidity in some of the other altcoins, it'll
Yep.
make the move very dramatically, and that wealth creation effect will kind of ripple through the rest of the space.
Interesting. One last question about the cycle, and then we'll move on to Demether. Having your track record in TradFi, how do you see, you mentioned treasury vehicles. How is that perceived today? How do you perceive it? What this is the first time, this is brand new, right? This is a few months old. Of course, strategy led the way a few years ago, but really the proliferation of the first few hundred vehicles, where does it go from now? BTC led the way, ETH treasuries are popping now. What's your view from both TradFi and Web3?
Yeah. So I think there's two really profound outcomes of this. Number one is giving people access via the equity market, which is
Hmm.
generally very well understood, has tremendous distribution
Yep.
and its own, I wouldn't say echo chamber, but this is kind of emerging from the echo chamber of crypto into the real world.
Yep.
And that credibility effect and far-reaching impact will mean that there should be a lot less volatility than you'd see in the underlying token and a
Mm.
lot more lingering interest in people wishing to build positions for the long term. So getting onto the equity market means it'll make it into long-term wealth creation portfolios as part of a small allocation. And as per the recent regulation that was passed in the US or is due to pass, it could well make it into retirement funds,
Yep.
which is also game changing. So why does this make sense versus previous generations? It's because the cost of living has gone up so much, and
Yep.
that's why you saw the likes of Robinhood just explode. People are looking to add on risk at the periphery
Yep.
and to try and make the returns just to have the standard of living that their parents and prior generations might have had in the
Yep.
US and generally in developed markets. So I have a lot of optimism that the equity markets will help to drive this. The second thing is the novel mechanism that they're using. So a combination of equity, token purchases, converts. So this is still something that I think will take time to make it down to unsophisticated retail.
Yep.
But at the time being, as long as they're getting price exposure and it seems to be outperforming, short-term expectations. I think there'll be a tremendous amount of interest going forward. So yes, there could be a speculative bubble, it could deflate, but that education process that
Mm,
retail go through is so valuable on a multi-cycle horizon. And I think that's absolutely what we need. We need to spread the base of those who are interested on
yeah.
board. For people, it doesn't matter to me whether it's through the equity markets or directly into crypto. And that education will create like an entirely new base of users that crypto projects can actually sell to and really fully benefit from over the long term.
Yeah, very interesting. Let's talk about Demether. This is so how did so you briefly mentioned the history of it, but how did it actually how did you start it? You mentioned you raised friends and family initially, and then how did you pivot to AI? Walk us through the story.
Sure. So in April 24, I had that crazy idea in my head and kind of jotted it down into a deck, circulated it to friends just so, they'll give me some scathing feedback. And it turns out there was a tremendous amount of interest.
Mm,
So friends had referred on. I obviously knew quite a lot of people within the venture space. And I didn't want it to be too professional. So I opened it up to friends and some of the high net worths and family offices out there and found that I have an oversubscribed round. So we managed to get in a decent amount of money in the late six figures and use that to be able to build a series of prototypes. The original idea of Demether was quite simple. We saw a massive proliferation of blockchains. We saw brand
yep.
new paradigms emerge with the likes of Blast, where you bridge over and instantly you get access to passive yield. It really lowered the barriers and the friction points to get people into an ecosystem. And it's something that really resonated with me coming from TradFi because the idea of being paid to wait.
Mm,
So booking a
hmm.
dividend while you're waiting for the share price performance to pick up and hit your price target is gold. Like that's something
Yep.
that everyone wants in the portfolio. So I think it kind of instinctively appeals to human instincts. We thought we could broaden that with an entire infrastructure layer. So Demether was you would take ETH from very large TVL chains such as Ethereum, Arbitrum,
Hmm.
and now Base, and export that into nascent ecosystems that are in desperate need of TVL to prime the
Yep.
pump. Because in any new blockchain ecosystem, you need users, capital, and dApps to drive it. Dapps are really hard to come by. You need broad-based ecosystem support, a big team, attending conferences, BD, etc.
Yep.
With capital, it's a lot more fluid and it's mercenary. So if we can hook the capital, we think we can bring the users and lock them in for the long term.
Mm,
When you mint a yield-bearing token via Demether, you mint it directly into the target blockchain. For the time that you kept your tokens on that target
yep.
blockchain, you got double the yield. It was really
Mm,
that simple. So a
got it.
strong economic hook to incentivize people to keep their capital on chain until the ecosystem grew and there were organically a lot more interesting things to do. So it kind of buys you into the ecosystem and
Yep.
gives the BD team time to grow it. What Demether has evolved into is a bit of an extension slash acceleration of the roadmap. Why are we ultimately doing this? It was based on the idea that we wanted to lower the frictions for retail and less sophisticated investors to get access to that yield.
Mm,
Yield became a huge phenomenon, partly because interest rates were so high. So it was a natural expression of TradFi bleeding over into expectations in crypto. Hey, I get like 4.5% doing
yep.
absolutely nothing in my Bank of America account. Why shouldn't I expect something like that on chain? So it made a tremendous amount of sense for newcomers to chain and also people who are holding onto capital. Well, how can you express that in the age of AI? And the number one thought that we had in all of this is automation. That would
Hmm.
free up so much mental space because you can not only optimize your position by doing that, you can also mitigate a tremendous amount of risk without having to wake up at 2 a.m. and sweating as to
Yep.
what's happening in various positions. So to give you some simple examples of what we do and how we do express it, we would take complex protocols, not necessarily difficult to understand, but difficult to manage actively.
Yep.
And one good example, I think, is a concentrated Uniswap position.
Hmm.
So we all know, love that you get phenomenal yields for placing your capital into a specific range, but you don't want to wake up at 2 a.m. and check the position, realize it's out of range, and be completely on the wrong side of a trade, for example. So if you can introduce some level of organization around that to be able to automate the movement between ranges, that's great. But that's only half the picture because the inference can do so much more with
Mm,
AI. Now, what if you can automatically check for liquidity to see if the pool itself is suddenly being drained by a whale and then you probably want to get out?
Yep.
What if you can monitor the assets and check that they were fundamentally still on peg? There's a huge number of pools out there that are generating a lot of yield.
Yep.
But if the asset's depegged, then you're definitely not going to be getting out what you originally put in, let alone your profits. And what if we can monitor that liquidity across chain? So
Mm,
we can plug into solvers, we can plug into social networks and listen to social signals, we can plug into oracles, and the AI can take a call on what is pertinent information and not to alert the user.
yep.
So if we can pre-package this into a very simple UX where you can enter these positions in one click, you can have the full faith that the AI isn't going to hallucinate and go off the rails. It's
Yep.
built around very, um, closely knit fence of
Mm,
guardrails. And secondly, to manage all of the risks that you can see, but you can't continuously watch,
yep.
then we have a product that's ultimately going to add immediate utility and value for the user. So with this idea, we want to focus very closely on stables. Then we'd
Yep.
like to expand it ever so slightly into BTC. And then the sky's the limit. We think we could expand that into a multitude of different tokens, maybe even RWAs. It's probably a little bit of alpha, but we're definitely looking at that space very, very closely.
Yep. So who can use it today? Or what's the roadmap and the timeline you have?
Yes, so currently we're an MVP, and the
Yep.
only people that can actually access our private link are those on our cap table, unfortunately.
Yep.
So we've got like a very close knit of people, a group of people who are providing us intense feedback. We're also part of a couple of accelerator programs,
Hmm.
including Chainlink Build and the Hadron Katana cohort. So plenty of people to kind of cast eyes and help refine our product.
Yep.
In the next month or so, as we move towards the culmination of the Katana program, we should have a closed beta ready. And that's a point at which we'd love to extend a group of people with some referral
Yep.
codes and watch it go viral. So that'll help to create a choke point around how many users are onboarding every day,
Yep.
and also give us some time as well to ensure that we have a sufficient number of audits, bug bounties, etc., to ensure the absolute security of the product.
Yep.
By the end of the year, we should be deployed on multiple chains with multiple products and multiple strategies. That is the current roadmap.
Nice. And this is really so the pivot to AI is not just a narrative. It's really about doing more work 24/7 for the user on behalf of the user without, needing to be monitoring everything.
Definitely. I mean, given
Yep.
that I guess two-thirds of the team who come from TradFi
Yep.
are huge focuses on risk management.
Yep.
And I think that is something that our gray hairs and battle scars can really help to kind of guide the entire space through and set
Yep.
the bar very, very high for that standard of security.
Yeah, we'll link Demether and everything around the recording here of the show. So, you know, it's coming up soon in the next few months. Then you're looking at like a full let's see, like mainstream launch.
Absolutely, yeah. So
Nice.
we should be including a lot more detail as to how the look and feel of the platform is and providing a
Yep.
live demo at the demo day, which is
This will
in
be a
the
web app. So is this a web app or is it mobile? Or what's how's the actual UX UI? What device?
Yeah, so first and foremost, it'll be a web app, but
Yep.
we'll mobile optimize it. We think we
Yep.
want to lower the barriers of friction as much as possible so people have access.
Yep.
It'll have a Telegram login mechanism as well, so you can
Yep.
monitor any positions and chat with the AI in real time to have a complete picture of what's happening with your capital.
Yep.
And then eventually, absolutely, we'd love to appear on the App Store and Google Play
Nice.
Store as well, access the mass market.
What's the how big is the team? Like how's the team built?
Yep. So we have three core members, which is
Yep.
myself, our CTO, Juan Dorado, and our head of project management. We then have an extended team of distributed workforce from UX designers to
Nice.
front end and smart contract coders as well.
Yep. Yeah, building in Web3 is never easy. I think people having, people who are new to the industry think that you can just put together a web app or any kind of product, and actually in Web3 it's the difficulty because it connects to the blockchain, because you're talking security, it's the difficulty is exponentially higher when you build in Web3 versus Web2. What's been your because again, you're not a Web3 native, right? A 20-year-old Web3 native
That's
meme trader. Uh, what's been what are some of the lessons that you picked up, on the way to now building? Because you've been on the investment side, TradFi, then Web3, now building. What are some of the things like the top two, three lessons that you've picked up actually building, Demether?
Absolutely, yeah. So, I used to think it was a bit of a stigma coming from TradFi and having
Mm,
this intense focus on quality of experience and safety and security above all else. I am delighted to say that it couldn't be further from the truth. Like
yep,
every day, we see some of our competitors laid waste to by North Korean hackers, or unfortunately, sometimes tripping over themselves because of some small errors in smart
yep,
contracts that they hadn't synchronized. So what can we do other than be the paranoid selves that have, become our characters inherently from all the things that we've seen across two different landscapes, Web 2 into Web
yep,
3, and of course overlay with TradFi. So I think that is absolute gold to live and die by your paranoia and keep your investors and your users' money safe
yep.
above all else. The second thing is kind of very clear delineation of who the users are.
Mm,
And this is something, honestly, I have kind of pinned up as like number one thing that I think about on Trello. Like, what would the user think of what we are about to do? And
yep,
that is making everything we decide crystal clear for us. If you are going after DGens, you really have to focus on all of the things that would make their lives easier. If you're going after TradFi, then you need
yep,
to harmonize with KYC AML. If you're going after Web2 users, then you need to strip back everything abstract
yep,
and ensure that everything is kind of super clear and risk managed. So we think we are very, very clear as to where we're headed. We
yep,
want to start with the slightly unsophisticated but crypto native user who is familiar with the terms but may not be able to manage such
yep,
risks. And then we want to graduate, and I think that's probably the right word for it, to earn our right to be able to pitch to and onboard Web2 users.
yep,
It's a process. I think it'll be iterative. I don't think anyone has truly, really cracked it. There are Web2 products like Telegram that have become the linchpin of the crypto space.
yep,
There are Web3 companies that are bleeding out into the real world, like Circle and stablecoins, but nothing has really kind of caught that middle ground of how to appeal to both simultaneously. And it's very difficult. There is no playbook.
yep,
So we're delighted and excited to be able to understand and realize that over time.
yep.
Third most important thing, I think, is know what you don't know. And that sounds absolutely ridiculously paradoxical. But to go back to your point that we are not kind of 20-year-old meme coin traders with a crazy look in our eye and flash of inspiration, we're super cautious. We're meticulous about everything we do
Yep.
because we've learned the hard way the downside of not knowing what you're doing or not knowing what's on the other side of the next product sprint. So I think speaking to everyone out there, keeping a very open mindset as to when and how you need to change product features, go to market, is absolutely essential for not only survival, but in the long term to thrive.
Yep.
And these are the three tenets we live by.
Very cool. Very cool. What's one thing that you feel so you're building now, but you're also building for the future. So what are some of the things that you're doing now that you feel like you are building for the future? You mentioned bridging Web3, Web2. What are some of the things that right now other apps are not doing that you are thinking about when it comes to the next several years on the building side?
Yeah, there is one ace up our sleeve that I'm going to dance around a bit. We'll
Without
kind of
without disclosing what you can disclose, just like a general frame of thinking.
Sure. Okay. So, right. I guess the general frame of thinking is simplifying and absolutely nailing what crypto native users would feel is second nature to them.
Hmm.
So,
Hmm.
putting money into Curve, automatically compounding your rewards,
Yep.
keeping an eye on the assets, etc. If we can kind of mechanize, automate, and risk manage that process, we've won half the battle.
Yep.
Because abstracting all of that complexity away is how you start to reach TradFi by giving them the glimmer of hope that there's incredible opportunities to come to on chain. The second part of it is to be truly innovative.
Mm.
So to give you an example, okay, if we started off with stablecoins as the staple asset that we go after to attract everyone out there and have the broadest appeal, then surely we want to include something interesting and structured that you can't get elsewhere. We
Yep.
don't want to be known as just orchestrators of capital into opportunities and curators of assets. Because ultimately, I mean, it's a very slippery slope to get down to like a beefy 27 chains, uncurated opportunities, pages
Yep.
and pages. People get lost. But I love the beefy product. I'll never say a bad word against them, but I think there's plenty of scope to innovate there.
Mm.
So it is a way of structuring things in a way that can really ultimately benefit the user. For example, can I automatically farm rewards on X protocol and park them into lending on Y protocol in order to
Yep.
maximize rewards and have an exit?
Without
It's things
spending an hour trying to bridge everything. Yeah.
exactly, exactly. It's about thinking what the next step would be
Yep.
and helping users to automate and package it together.
Yep. I do think it's still a very clunky industry, right? I mean, nothing, not to say that banking and TradFi is easy, because sometimes, the fact that these even uh, times and cutoff times to send wires is wild in 2025. But
Absolutely.
Web3 also has its share of issues. I mean, showing MetaMask to a non Web3 native user and why they can't send ETH or USDC without. I mean, it's a mess. It's a mess. There's a lot of room to improve the experience for new users.
Oh, absolutely. I mean, we
Yeah.
can step back even further. So I was trying to explain to one of our TradFi family friends that, a dollar is not a dollar when it comes on chain. And they're like, "Well, no, what are you talking about? Like, we have dollars in Westpac in Australia and Combank, and we send it. Of course, it's fungible." It's like, no, 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 no. So you
Yeah.
have algorithmic stable coins, you have staked, unstaked, yield bearing, non-yield bearing, like,
Yeah.
and every flavor in between. And liquidity will depeg it potentially, and then it can repeg, or
Yeah.
maybe it can be harmful. It's an absolute minefield. And
Yeah.
if we can't explain something as simple as a stablecoin without a huge, 5-page disclaimer attached,
Yeah.
I think we're
Yeah.
failing.
Yeah.
And it's little things like that that we want to push below the surface and risk manage, which we think will make all the difference in the long term.
Yeah. Very cool. Very cool. All right. Last question here, completely unrelated to AI, but more to the cycle, because your take on the cycle and where we are is almost, I'd say, I think the majority today, I'd say the consensus is peak in Q4 and that's it. You have a very different take. So you're definitely in the minority today, even on crypto Twitter, thinking that, okay, this is the beginning of this, or the rise of the new cycle. So let's talk pure price targets, not financial advice. This is not a view from your colleagues, your former employers, or anything. This is you. You can get it wrong, you can get it right. What is your estimate for the peak when it comes to, let's do Bitcoin and ETH in the coming
Sure.
12 to 18 months?
Okay. So my old price target, I think prior to 3, 4 months ago, was something like 150K. I would be all out. Like I'd probably be DCAing from 100K up to 150K.
Yep.
Now I'm fairly confident it's going to smash through that. So my price target will be something close to 200K for
Yep.
BTC. And for ETH, I'm pretty certain it's going to head north of 6K. So let's say 8K and be bold, rather than too cautiously.
Yep.
What I would caveat all of that with being a round tripper of multiple coins that I deeply regret not selling in my portfolio is people should have a very, very clear way in which they're getting out. So
Yep.
I've already sold a quarter of my BTC once we hit like 100K,
Mm.
even at like in the 90s, and I will kind of continue to go do so at increments. It doesn't matter to me whether we cross 200K. It doesn't matter to me whether we cross 150K. I think once I've gotten a proportion out, I can breathe easy and
Yep.
still have some skin in the game to watch it kind of ascend to all-time highs. And that is probably the best advice I've heard. It's certainly not financial advice to everyone. You kind of have to do your own research
Yep.
and your own subjective view, of course. And that's kind of part of the fun and the journey. But not taking profit is 10 times worse than trying to time the Pico top and
Yep.
realizing that there's no liquidity, to your point with SafeMoon,
Yep.
and there's no way out.
Yeah. Very cool. Kartik, thank you for coming on the show. We will link everything, all the resources around, including, of course, Demether. Thank you for being on the show. This was a great conversation, very timely too. We'll definitely have you back when you have more developments too on the building side. Thank you everyone for watching the show, and we will see you next time.
Thank you, Matthias. It's been a
Thank
pleasure.
you. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.